We're going to go even deeper now into the data-driven economy. You know, obviously data has been such the buzzword over the last several years across our industry, whether it's, you know, telematics and IoT and sensors and all new ways of thinking about data. And our experts over the next hour or so are going to really help us dissect and understand those trends and what's happening. So without further ado, I'm going to kick off with our first interview. Please welcome to the stage Srini Sankar, the Enterprise Data Leader with Hanover Insurance. Srini?
Hi. Thank you. Should we sit?
Yeah, just right here. So Srini, I know you're a data guy. Maybe you even said just before getting on stage that you're even more of a data guy than an insurance guy, but I actually appreciate that because we really need people who know and understand data. So for our audience, maybe just a quick introduction of yourself and your role at Hanover.
Yeah, as he said, right, so I'm a data guy for 25 years in the industry. Insurance, in this role, a little over 7 years, but before that I've been with financial services and various banking and so on. So yeah, the data, as we were talking, right, so I usually don't go to my own vertical insurance specific events like this, right? I'm always at the CDO, CDAO events, right? So because the way I see data is, right, the data knowledge, the data expertise is applicable across all industry. Yes, of course, right, there are specific things on the insurance side, right? So that's how Market Force got me here.
You know, and I think that's interesting though, because while so many of us, we're in the insurance industry, but we have other expertise and disciplines, and the opportunity to look across industries and understand how others are thinking about data is really critical for all of us. So maybe I'll start off with a big question. Srini, are we on the brink of a data revolution?
Absolutely yes. Absolutely yes. In my 25 years, I haven't seen a better time than this, an extraordinary time than this, to be a data leader. Organizations everywhere talking about data-driven organization, right? So when we say data-driven organization, it's not just using data to manage certain governance aspect of it, security, really, we have to secure data. No, you are now talking about monetizing data.
Yeah.
You're now talking about data for driving the growth of an organization. So not all have skills to really take an organization to be fully data-driven. That's why, as I said, as a data leader, this is a phenomenal time to be it, and they all need people like me.
You know, I think part of that revolution is we have access to so much data that we never did before. Not only our own data, understanding, but also so many new data sources and kind of the term around open data. So let me put that twist on and say, how open do you think data will become for us?
Data has gone so open in the last 2 years, even during the pandemic, right? Take a look at the COVID data. We haven't seen individual states, even at the county level, town level, started publishing data, right? The COVID pandemic data, right? Number of tests, how many infections, right? How many hospitalizations. And then many states have gotten a lot better in the way they do insights, right? And now if you apply that to insurance, even insurers, say life insurers, right? So now they can take that data and analyze a future pandemic and predict, right? So where it will start. Of course, there are already data, open data specifically, right? So if you look at companies like BioBot Analytics, they have started managing and predicting the COVID pandemic by use of wastewater. So we now have tremendous amount of information, all open data.
Yeah. Well, kind of along that vein of we have access to more data than ever. I'm going to get to the point where I want to ask you about how we're using it kind of internally, but let's stay kind of the externally focused. As more and more data is becoming available, how are we finding it, accessing it, are data like marketplaces where we're going?
Absolutely. Data marketplaces have gotten really strong now. It is becoming really, really strong, and people have started using data marketplaces. Of course, like there are trade-offs, right? Like so even this past weekend, like I was having a LinkedIn discussion with other data leaders about the quality of data that we get out of these data marketplaces, right? Like, yeah, as a quality, I won't call it really it's 100% perfect, but there are like data quality challenges, but data marketplaces is the way to go, right? Like both internally, as you said, as well as externally. So externally, like everyone knows, right? Like you can go buy data from traditional providers and then like the more modern providers. Like so when I say traditional providers, like those who've been in the data marketplace for like 20, 30 years, like LexisNexis, Dun & Bradstreet, and so on. And now if you look at it, right, like Snowflake, for example, the data management, the cloud data management company, they are doubling down so much on data marketplace. And they are asking customers to monetize their data via their marketplace so that like it's business for them, and then like customers also starting to get monetized data. Internally, the industry, when I say industry, like I'm talking like the data as a whole, right? Like so whether data in retail, insurance, e-commerce, or healthcare, it's moving towards even internally as a data marketplace with the new concept and new architecture that are emerging called data mesh and data fabric, data as a product, productization of data. That's internal marketplace.
Yeah, so kind of a follow-up to that. I think I even mentioned yesterday during a data and a digitization conversation that I think every insurance executive, every time, everywhere, has said the phrase, we are data rich but knowledge poor. But yet with open data and data marketplaces, we now have access to even more data than we ever have. What advice do you have for our carriers in the audience to kind of sort through what's the data they should be looking for? How do you decide what data to focus on?
So if you look at insurance, right, like this is what I tell a lot. When all other industries talk about data monetization, right? Like, so they really talk about like, oh, we take our internal data, be it like customer data or like agent data, or like if we go down the path of social media companies, right? Like that's completely a different story. Like, so your data is their product. When you look at insurance, right? Like insurance has always been monetizing data. Right? Like because we don't have supply chain, we don't have manufacturing, we don't have inventory. We don't have a tangible product that we touch and push. It's all about information. It's all about promises, exactly. So we make a promise to a customer based on all kinds of data and information, whether it's about that customer, the home, like whether it's in the flood zone, the various demographics. And we can even take it to the next level now, right? Like, so those type of data is available. That's why, right, like, yes, we are in the brink of that insurance data revolution.
You know, I was thinking when I was going through notes for our discussion, how different industries have been using data for some time, since I know your background. So like my first career was in politics. And I remember in the early 90s writing, database programs on voter files, because in a campaign you can buy the voter file. I bought the DMV file. I bought like all this different data so I could tell in this household, not only how they tended to vote, how often they tended to vote, but I could tell if they had a van versus a pickup versus, a minivan versus a car, and you can start 2 and 2, certain characteristics about that household versus whether driving pickups or, a Prius or whatever the case might be. And then you throw in employer data. Does there's a doctor live there? Does, a blue collar worker there? So much. Insurance is caught up to that personalization. As we have more data available, we can start to really create, those personalized propositions, value-added services. Where do you see that going with data for carriers?
Yeah, before I answer that question, since you brought the politics, right? Like I'll tell you, I am so interested in politics. So if you look at the entire Cambridge Analytica scandal, happened because of that demographics.
Micro-targeting,
right? In the early 90s, it was very limited demographics. But if you look at 2016, how these campaigners were able to go and knock on someone's door purely based off that grandfather posting pictures with the metadata, and then lat long, they know that person's leaning, and they wanted to sway that person. That's how it started, right? So coming to the personalization of insurance, again, it's all about data, right? Like if you look at all insurers now, the insurtech, like even what we call like the digital insurers, like if you take Lemonade for example, they want to capture a 30 to 40 year life cycle of a customer. So like in retail, they talk about like a 6 months or like 2 years, 3 years life cycle of a customer. Here in insurance, we talk about 30, 40 years. Like you start with someone coming out of college, renting an apartment, renter's insurance. Then they go and buy their first car. Now you give them the auto insurance along with the renter's insurance. You are now like really doing that umbrella insurance type of stuff. Then they are starting to buy a condo. You are now like converting renters to homeowners. And then they are starting a family. You are adding other umbrella insurance. So that life cycle goes on. And then once they reach their age 50, start marketing life insurance to them. So the life cycle, so that is also all because of the data that they can see from this person, because the person starting the first job, posting Instagram, Facebook posts, now you can actually market it.
Yeah, it's amazing how creative we're getting to leverage some of those open datas. But let's follow this personalization track a little bit further, because one of the, you mentioned earlier, carriers monetizing data. What about policyholders? I've seen some startups now starting to actually pay insurers for access to their data. Of course, oftentimes with telematics, you give access to your driving behavior. You might be getting a discount. We're going to talk more about that in a bit. How should carriers be thinking about those incentives and the monetization of data for the consumer, for the policyholder?
Yeah, like so. I feel that it hasn't taken off to a great extent like what everyone wanted it to be.
Yeah.
For example, right, like say Geico Progressive started giving out the dongle to analyze the driving behavior and set the policy and premium rate based on that. A lot of states regulated that, right? Like the states having pushback. Where I come from, like Massachusetts, you cannot do that. You cannot penalize a driver just because he's hard braking, hard accelerating, and like taking like hard curves or something like that, right? Whereas like other states are allowed, and monetization of that is quite interesting, right? Like all states was the first one to start some of these like collection of data, the driver behavior data like 5-6 years ago, and they wanted to sell that to other insurers. You can't do that.
And I think that is the great tee up for my second follow-up question. And real quick to the audience, we only have a couple minutes with Srini left, so if you do have questions you would like to include in the conversation, please do submit those now. So last question around personalization, then mentioning Cambridge, mentioning state regulation. Where are the boundaries and how should we be thinking about that?
Yeah, so see it starts with the GDPR, right? The European regulation, we saw that executed for a few years. They are penalizing various businesses because of non-compliance. And then the CCPA, California, there is like other 18 states that are following. Insurance has always been heavily regulated industry, right? Like, so there will be heavy regulation. So I'm now actually also dealing with like individual states regulator, like talking about AI, data and analytics, like how far can we go? So there will be heavy regulation. So as part of our job, we have to navigate through that. Like it's not that I can take.
Let's ask that. How should insurers prepare for the regulation that may come, even like from cross sectors?
So I would say like make sure, this is a question that I asked my management a few years ago, do we know where our data is?
Yeah.
So make sure.
I won't ask you what the answer was.
Yeah, no, I actually gave the answer, and it's a well-matured program now. It's actually you have to build a catalog of all your data assets.
Yeah.
So that when the regulators come at you, you know where to go and provide that information, whether to shut off, opt out, like the CCPA. There are like 18, 20 states following the CCPA model.
Yeah.
So you gotta know where your data is. Like if you don't know where your data is, like then it's going to be very hard when the regulators come at you.
You know, I think that was a nice period to this discussion. So Srini, thank you very much.
My pleasure.
For your insights and time today.
My pleasure.
Yeah.
Great questions. Like thanks for sitting here.
That was great. Thank you. So let's go a little bit further into data. And with my next fireside chat, we're going to be really kind of digging into telematics. And I think that's going to be a theme with data and utilization. So Anthony and Hobie, please come on up. Thanks, Anthony.
Hello. Good to see you.
Yeah, thank you. All right, so gentlemen, let's take just a minute or two. I'll let you introduce yourselves. What's your role? What's your kind of take? Where are you from? All that good stuff. Hobie?
Nationwide Insurance, 29 years with Nationwide and in the industry. Started off in the actuarial space, but I currently lead our emerging capabilities efforts related to middle market commercial lines. And part of that includes IoT and telematics data and how we're going to leverage that data within our standard commercial and nationwide agribusiness organizations.
Yeah, thanks, Hobie.
I'm Anthony Delaney. I'm Senior Vice President of Product Management and Underwriting and Acceptance Insurance, leading distributor and carrier in the non-standard or high-risk insurance space.
You know, spending the last 20 years on the carrier side, and Hobie, as we talked earlier, 12 years with Nationwide, still a Nationwide customer. But I've seen a lot of insurance carriers, like 4 or 5 years ago, jump into telematics.
Yes.
It was like the hot thing to do, and so many of them got in and then tried to figure it out. You know, try to figure out how do we pay for it or who should pay for it, how do we use the data, and I know a lot of carriers ended up abandoning it. Either because they couldn't quite figure out the economics or the scale for personal lines or for the fleets on the commercial side. So I'm interested from both of you to see, you know, how do you think telematics has evolved over the last 5 years? You know, for those who maybe took an early look at it, where is it today? Where have we come?
So I'll start. I think it depends on what segment you're working with.
Yeah.
Obviously in the personal line space, penetration has been solid and it continues to be very influential, not only in the writing of new business, but the retaining of business. The solutions that are available are no longer rely on dongles. You can rely on apps to do this and considerably less expensive than purchasing a $100 device to stick in the car. Moving into the commercial space, it's a different beast altogether. I'd say the smaller commercial space is 10 years behind where the personal line space is. But once you move into the fleet space of commercial lines, what we're finding is that a large number of these insureds already have a telematics solution.
Yeah.
Not for the purposes of insurance,
Yes.
but really for the purposes of just managing their fleet and their drivers and where their goods and services are. And so the challenge that we're looking at is not how do we sell them telematics, but how do we get them to consent to potentially share their data with us, knowing that it's likely going to result in an underwriting and or a pricing intervention.
Yeah.
You know, I think that's very true for the personal lines sort of upmarket, you know, standard, down into the, you know, a tier below that, that middle market tier. But, you know, historically, when we've seen innovation in pricing, a lot of what data is useful, you know, credit modeling back in, you know, the early, you know, end of it, Progressive started with non-standard. You know, vehicle history data started with a lot of non-standard because there's more events, there's more spread of risk, and it's a rich innovation fueling source. And so what I see is, you know, the market that, the parts of the market that are going to allow for that future innovation, they haven't adopted it yet. You know, there are not many non-standard carriers that have a wealth of true telematics data. So I think that that's what I'm seeing now is there's an opportunity there as we've moved away from connected vehicles and we've moved away from expensive dongles to low footprint apps to drive that data collection. Because keep in mind, we don't have the connected vehicles for a high-risk driver. We don't even have cell phones that are current generation. So, what I think we have to realize is that we can get robust data for making meaningful inferences, meaningful pricing and lifestyle, actions as a carrier on a smaller data set, driven by a less, accurate, less cumbersome collection method.
Yeah. So let me ask you this, and this is a little off script in terms of, policyholder, consumer comfort with sharing that type of data and driving behavior. Dan Gumpright was up here just a little bit ago saying how he had a Tesla, but he hadn't gone the Tesla insurance route because maybe he wasn't sure that he wanted to, share that information with his insurer / the manufacturer of the auto as well. And I imagine some of that absolutely also changes with personal lines, small fleet, large fleet, et cetera. Well, how are you seeing those trends develop with driver comfort with sharing that information?
I would say in the commercial line space, it's very difficult to get enrollment. There's a real reticence on the part of most of our commercial accounts to engage in the sharing of data, expecting that the underwriting outcomes are going to be problematic. Personal lines continues to make really strong inroads in the space. We have strong objectives to continue increasing the penetration of telematics within our personal lines book. It is our desire in the commercial line space, but like I said, we're about 10 years behind that in enrollment. So,
Anthony?
Again, with the more transactional, higher risk market, there is a lot of concerns over privacy. We were just talking before we came on stage that dash cams, fantastic for the commercial space. Rideshare, they're going to adopt a dash cam. They're going to adopt the dual camera approach, but a personal lines, a high risk auto customer doesn't really want you seeing into the car. But I think that what we have to do is present a clear and transparent way to the customer to understand what and why. And I would argue that really the most important part of that is we need timely feedback, timely interactions with the customer as we collect that data. So that they feel comfortable with it. But I also think that presents a lot of interesting opportunities.
Yeah, so both of you have talked about the evolution from the dongles to apps and et cetera. Anthony, specific to you with that customer mix for non-standard auto, how are you thinking about telematics? What's your device? What are you offering? How are you trying to think about capturing that?
Well, I think with short policy lifespans in the non-standard space, dongle was never going to work. I had somebody back before said, we think that a big part of it is opting into it. It's the placebo effect. What if we just gave them a dongle that did nothing, and we'd probably see an improvement in the non-standard space. But it's cost prohibitive. What we see going forward is something that is that isn't draining batteries, that doesn't use every sensor that needs to be, to get an effective reading, and doesn't even need to immediately impact rate, because I think that there's ways that we can incent a good driving behavior outside of the traditional underwriting activity for a high-risk customer.
Mm-hmm. Yeah. So so much of what we're thinking about as insurers, there's kind of the macro data. Maybe not down to the driver. If we just even get the data, we can better understand how, the fleet is operating, or use that to make more macro level, data-driven, underwriting and pricing decisions. But then it also gets down to the micro level too, where we have, insurers looking at, pay per mile or a dynamic pricing model, based on driving behavior. Where do you think that's going? Maybe Anthony for personal lines, but let's start with Hobie for the commercial.
Sure, I think one of the things that we're trying to figure out or starting to figure out is drivers that particularly gig economy style drivers, they're spending part of their time as a commercial risk and then part of their time as a personalized risk. So how do you identify when am I commercial, when am I personal, and can you turn that on and off within the telematics space, either through an app or some other device? So I think that's an interesting challenge that we're looking at, but we're back to really at the heart of our journey on commercial lines is getting traditional adoption of the telematics solution.
You know, there's been plenty of attempts at pay for mile, much like telematics. You know, there was a moment in which everybody wanted to try to do it, and I haven't seen a real meaningful success story as much as I would have liked to have seen it. You know, we know that the highest predictor of you know, losses in personal auto is the amount of time you spend on the road. So it would be nice, but we haven't cracked the code. Part of it is, you know, there's too much on and off. There's too much remembering to refill. You know, I think that, again, you know, something app-based presents an opportunity to do some of that. I don't think that notionally people like the idea that I could have an off day where I sped a little bit more and that cost me more to insure me for that week. You know, what I see as the opportunity there is, you know, if we provide the customer with timely and actionable feedback. Yeah. This is how you scored. This is how you should think about driving better next time. And it's okay that you didn't drive great this time. Yep. But how can we help you become a better driver? How can we help you do what you want to do anyways, which is lower your overall costs of insurance, to gain incentives that can be non-traditional incentives? You know, how can we coach them to become better? And I think that that's applicable also upmarket, especially when you're considering new drivers, newly licensed drivers.
Well, and let's, you know, this might get back to the fleet question too. So as a dad of 2 teenage drivers, yeah, you know where I'm going. Well, my insurance, you know, for our cars has gone up, you know, tremendously.
Had a couple of zeros.
Well, yeah, exactly. And so what I've been asking for years, and maybe if I were more of an entrepreneur, I would have started a startup by now, is something that is usage-based insurance, like based upon who's behind the wheel. You know, that flat rate for the car when it's not in motion, you know, you're comprehensive, but when it's in motion, I should get one rate, you know, as a mature driver who's conservative, and maybe a different rate for when the kids are behind the car.
You know, I think that's an interesting approach, and I think a lot of that is possible now because of the app-based approach, because I may lend somebody else in my household my car, but I'm not, you know, sharing phones. Yeah. I mean, I've got a 14-year-old, and when she starts driving all too soon, I know she'll have her phone with her. And so I agree. I think that there's a big opportunity there.
Facial recognition. I mean, there's so much to do.
And hopefully she's not tapping it and, and distracted driving, right? So.
Yeah. But on the fleet side too, you know, with so many vehicles, you know, being used by multiple drivers, how are they thinking about that in telematics, looking at the driver versus the vehicle?
Yeah, so the way we're approaching it right now is it's the vehicle. Okay. So it's really difficult in the commercial space because, you know, not every company is providing a company-owned issued cell phone. Yeah. So now how do you convince a employee driver that they need to download the app onto their personal cell phone? They're asking questions like, "Were you tracking me when I'm not at work?" So there's ways around that, but you know, a lot of what we're looking at is you're putting a dongle device in the vehicle, and you can infer who's driving it. Sure. Oftentimes, once you've analyzed the data, but you know, we're really looking at, you know, from a fleet perspective, how are the vehicles behaving, and a little less about how are individual drivers behaving.
But is that something, you know, from the fleet manager? They have that data.
Absolutely.
Because they know who is driving and they're looking at it.
Well, and I think that's one of the interesting challenges is, you know, they'll invest in these technologies, or we'll invest with them in a technology. We're looking at this idea, well, how often are they even logging into the portal to check, right? So a lot of these telematic service providers not only provide a portal that a fleet manager or a safety manager can look at, but they actually provide ways that they can offer feedback and coaching, incentive programs for drivers to improve. So we're actually looking at this idea of, well, how often is the fleet manager even logging into the portal? Because that's indicative, right? If they log in once a month, or do they log in once a day?
Yeah.
And where are the patterns? For us, fortunately in the fleet space, so much of our business is tied to our loss control and risk management services, right? So it's not just, put a dongle in and good luck. It's put a dongle in and you've got a risk management professional who is aware of how do I help coach for better performance and better results.
Or as Anthony mentioned a little bit ago, coaching drivers as to how they can
Right.
improve as well.
And for the highly transactional, non-standard or high-risk driver, we can't have that many risk managers out there.
Right.
If they're bad enough that they need a live person to do it, we don't necessarily want them in the book of business. What I do think, though, is soft touches are helpful. One of the presentations yesterday had a line I thought was pretty good about, it's a game of inches.
Yeah.
I mean, we're looking for incremental improvements. I mean, that's where we start to see meaningful change in the overall is by continuous incremental improvement. And I think the good parallel there in terms of the training is things like the Starbucks app. It knows you buy 2 mochas every week, and so they incent you to get that third. If we can get people actively using this, not when they're driving, but immediately following, once a day, and we incent them to go in there and view this timely feedback, we can move behavior. And there's already some exciting people that are headed in that direction, especially in the European markets.
Yeah, would you say there's kind of like a even hierarchy of data or insights, even baseline sometimes understanding exactly how many miles are being driven.
Yes.
For so many of our policies, we don't even know that. But even just understanding just truly how many miles, per month is that vehicle. And then like the next level would be, how is it being driven?
Right.
And then the next level is, additional insights. How are you thinking about those hierarchies from a product side?
Yeah, so I would say on the commercial line side, it definitely starts there, right?
Yeah.
So it's GPS and accelerometer. That's your bare bones telematics. Where are they, and are they upright? Which is, it's important, right? So
Also, that comes up in the non-standard space too. I mean,
yeah. But then, the things we're starting to explore are how do you stack data on top of data, right? So the commercial vehicle, the traditional rating variable is territory and radius, right? So if I price the vehicle based on where it's garaged, may have absolutely no relationship whatsoever to where it's being driven every day of the week. Is it being garaged suburban or rural? Is it being driven predominantly urban settings? So those are kind of interesting exercises. And then the next generation of that, I think, is how do you stack additional interesting third-party data? We call it enrichment. So you're looking at traffic densities, accident frequencies based on lat long, in addition to the traditional time of day, miles, GPS. So
Awesome. Audience questions are starting to come in, so audience, please remember, submit your questions via the app. I think we've got a pretty good baseline of where we are today. So let's pivot and look to the future and where data and telematics are taking us and going, because there's still a lot of unknown and a lot of opportunities. Starting, I'm going to do kind of the OEM and then the technology. So starting with OEM here again, mentioned earlier, Tesla Insurance, smart vehicles. How are those relationships evolving with the auto manufacturers to get access to data exchanges or through the marketing? How are you thinking about that down the road? Start.
Sure. So when we see those smart vehicles, there's usually a couple components. One, brand new smart vehicles that are fully connected. Usually it's robust data, everything's subscribed for, and that sort of thing. As things sort of move further and further down the market, subscriptions don't get paid for, that data becomes less available. But in the end, I think really what it comes down to is you end up with a preponderance of models like Teslas. We'll give you a big discount because it's a Tesla branded thing for Tesla vehicles. I don't know about you, but multiple cars and multiple vehicles in my family, they're not all the same make.
Yeah.
And they're certainly not all the same generation.
Yeah.
So it's imperfect data, which is why I think there's a value to it. It's robust. I think for segments of the market, it's important, but for the broader, more complex household, it's not quite there yet because it's not going to be full.
I would just add, I think inevitably OEM data is going to play a role in the future of telematics. And we are currently, pursuing conversations with several of the major OEMs that are, producing vehicles, every, new vehicle since 2020 really rolling off with, connected capabilities. And so what will be interesting as these things continue to evolve, obviously there's still the need to adopt, right?
Yep.
People are holding on to their cars longer and honestly, it's going to be a while before the momentum is fully
I
shifted.
drive a 2015, and I got notice a couple months ago that the 3G connectivity in my vehicle is not going to be supported.
Exactly. So that's an interesting scenario, but I think there's definitely future there. If you're not thinking about it, you need to be thinking about it.
Yeah.
And having those conversations with the OEMs and exploring ways to tap into it.
Hobie, you mentioned data enrichment, and I think that's kind of that next generation looking for, going beyond GPS and the dongles to, additional insights from dash cams. Where do you see that enrichment going and those opportunities for insurers?
Yeah, I think the general enrichment in terms of, weather conditions and road conditions and like that are going to be pervasive. I think that's for sure. What's remains to be seen is the role that the dash cam will play.
Yeah.
I think in the commercial space and for sure in the fleet space, dash cams will play an incredibly important role. What becomes very interesting then is the AI that's running behind them. Is it forward facing? Is it forward and rear facing? A lot of privacy concerns that we're hearing from our customers is, I want a dash cam, but I don't want it to pick up sound and I don't want it to pick up interior.
Yeah.
Right. Well, there's signal there, right? There's a lot of really interesting information. But certainly forward facing is an interesting area with all of the enrichment that you can gather using AI technology is definitely on the horizon, particularly for fleet and the long haul space.
Yeah.
I think on the personal side, it's customers are always looking for what is in it for them. And so if it's a participation discount, that's going to get people to adopt it. If it's sold and marketed as, this is a way that we can help save your life in a major accident, or this is a way we can help you defend that you are a good driver and they're claiming you're at fault, which happens far too often. I think that there's some opportunity there, but it comes with a big but. Customers, especially these days, I think really want to embrace this right to privacy, which unfortunately is still very nebulous and ill-defined and means something different to everybody. So there's a lot of pushback. There's legal pushback, statutory pushback in places like California and others. There's personal pushback from people of all stripes across all parts of the market.
I think the biggest challenge on the dash cam side is the expense. These are expensive pieces of equipment on top of the volume of data and monitoring that comes with that. So this is not your Amazon $100 dash cam that you can order and have delivered by 5 o'clock today, right? That you can install yourself. These are considerably more expensive devices.
But that'll be coming down in price.
They will.
In time.
Yeah.
Or they'll be built in.
You start thinking about that
right?
cost relative to a $1,200 average premium.
Yeah, just
Personalized
the economics
auto.
aren't there.
Right.
Yeah.
If we're talking about a $100,000 account or business auto account, that's a different proposition.
So last question, real quick. We're about out of time. Audience member asked, I think, a really interesting question, something we wouldn't have talked about probably even 2 years ago. I was planning to ask around data protection and regulation in this space, but they also put in the spin around cyber. and the cyber risk associated with not only connected vehicles of the future, but also for fleet management systems as well. Anthony, perspective on?
That's a difficult one. I mean, obviously, anytime you have a digital asset, a data asset that includes personal identifying information, there is a risk. There is an additional exposure there. I'm reminded sort of early in the scan-as-you-go toll system that, workers' comp people are like, well, you're going on a weekend trip, you're supposed to be at rehab. I've caught cheating spouses. I mean, there was a lot of concerns around that. I think that's it's very obtainable online without the appropriate safeguards and protections.
Right.
And it's much more personal than even some of that other PII, which at this point there's black market vendors for.
Yeah. I'll be real quick on the fleet side.
Yeah, I think it's the same concerns. Obviously, do every diligent thing that you can from managing the data flow. So obviously the data is going to the vendor is sending the data to the insurance company, having all of the safeguards in place, and the quality auditing and monitoring is important. But these devices are susceptible, and so I think it's going to be an interesting challenge to face, and I'm not sure how to crack that myself.
Well, maybe we'll have to come back on stage in a couple of years and revisit a couple of these topics and see how it evolves. So,
Very good.
Anthony, thank you both very
Thank you.
much. Great, thank you. Thank you, Anthony. Next up, we're going to take the next turn of the crank in terms of data and ask questions around how can insurers capitalize on the wealth of data that is now available through IoT sensors. And as we're moving more and more towards, not just reacting to incidents and activities, but to predict and prevent as well. And to help me go through those discussions, Matteo Carbon and Daniel Campany, please come on up and let's get this conversation started. Matteo, always good to see you.
How are you?
Wonderful, Daniel. Thank you very much for joining us. So let's take a minute and do introductions. Matteo, I think I have now seen you in about as many states, but not quite countries, as you go around. You were also just on the other stage a little bit ago, sharing a keynote. So maybe just a quick introduction and background on Matteo Carbon.
Good morning to everyone. I'm an insurance guy. I advise insurers, reinsurers, and tech players around the usage of IoT and telematics. I try to work with the soul of the innovation unit, but speaking the language of the business lines.
Yeah. And Daniel?
Yeah, so I work at the Hartford and I lead our Iot Innovation Team. And what that is a team of about 14 people. And what we do is we run very intentionally designed experiments to try to find the win-win value proposition for us and for the customer around various applications of IoT data and technology.
I love it. And I've been looking forward to this conversation in particular because I will admit I'm kind of an IoT geek. I think the opportunities with new sensors and technologies and connectivity maybe not solve all of insurance's problems, but will certainly help us in so many ways, from wearables, from electric sensors, from water sensors, et cetera. It's really opening up so many opportunities for us that were never before available. You could almost call it an explosion of data from IoT, from wearables and sensors. So how can carriers capitalize, or how should they be thinking about IoT today? Daniel?
Sure. So I describe it in three main buckets. The first is improving the loss ratio by mitigating or preventing claims or mitigating severity. The second is improving our underwriting and pricing execution. By having better, more granular data and proxies for risk, we can put a fairer price in front of our customers. And then the third is integrating that data and those devices downstream into the product and service offerings we give our customers. So usage-based insurance, advisory services on risk prevention, and many other applications further downstream in terms of the product and service offerings we give to our customers.
Matteo?
I would like to elaborate on what just has been precisely described, saying that many of you have think about IoT or telematics as a product. It is not. It is a capability that you can apply on different areas, as just described. And I've been lucky enough to see some carriers starting with these, with their tentatives and scaling them. I've seen the Hartford, that has been for the past 5 years a member of my think tank, starting from the first experimentations and then adding new technologies, adding new business lines where they are applying it and applying it in different functions. So this is because they are reinforcing step by step this capability.
So let's maybe break down some of those different types of IoT, because I mentioned a couple earlier, from the wearables to the sensors, electricity, water, et cetera. Maybe Daniel, kind of break down for me, how are you looking at different types of IoT devices?
Sure. I should start by saying most of our focus is in commercial lines
Yep.
with respect to the applications. And what we really do is we start with where do we think there's the most opportunity with respect to those three main buckets.
Yeah.
We're really, because I think to be an effective innovator, you have to be both an idealist and a realist. So the realist in us is really proving the business case by starting with improving the loss ratios and then using that to get runway and funding to go on to the more transformational applications of IoT. So our most mature effort is in water sensor technology and using that to prevent water damage claims, which is an enormous problem in the industry.
Yep.
We're at the point now where we're scaling that up and operationalizing it within the core business. Fast following on that, we've got other applications in worker safety with both imagery and computer vision as well as wearables. We've got some more work to do in commercial telematics. We're thinking about more transformational things with respect to like occupancy data and how that can be a better proxy for general liability slip and fall risk than say square footage of a building. So we've got a lot of things in the hopper that we're working on, from very early stage ideas on napkins all the way to something that we're scaling out big time.
I know I'm particularly interested in where the computer vision space is going, just with so many cameras in so many, especially commercial buildings that have only been used forever after something happens, to go back and look and check the tape, see what happened. But with computer vision, being able to monitor what's happening internally, externally around your space, there's so many insights that can be gleaned of, oh, hey, someone made some motion that looks like a trip, or 3 people have made a motion that looks like a trip in the exact same spot. It's just a matter of time before someone has a trip and has an injury. So someone needs to go take a look at that. We never had that type of insights before. So Matteo, from your vantage point, different types of sensors, where are you seeing traction across the industry right now?
Let's say clearly there are use cases as auto telematics, where the level of maturity is higher, are on the table of insurers for many years. Today, telematics has been already recognized a necessary capability for personal auto insurers in a market as US. But I would like instead to focus on what is having traction today for our audience, to drop you 2 examples, more exotic, because we don't expect them, but they can give you a sense that in any line of business that you are working today, you can find an opportunity. 2 weeks ago, I was in Paris with one of the European members of my think tank, the Iot Insurance Observatory, that is the market leader in medical malpractice. So this was an off-site meeting where the innovation team, together with the CEO, was sharing with all the executives how IoT for risk prevention in hospitals, so the technology they are installing in the surgery room, that is where large part of the medical malpractice claims are generated, will be a core pillar in their strategic plan of the next 3 years. They have already started to install this. They did experimentations. Now they are scaling it. So you will not expect that an insurer go to an hospital suggesting which cameras, which videos, and which technologies to install in a surgery room to prevent risk. Another example is the senior economy. So your clients are getting old in any market. I mapped for the member of my think tank the journey, so the day of a senior that is still on a have not health issues, so it live alone. And in this journey, in a day of this senior, there are a lot of pain points for the senior and for the family. So a lot of solutions are being experimented by some insurers in some part of the world, and Japan is one of the markets that is more advanced on this, that can answer to these needs. Clearly, discussing with one insurer a few weeks ago, if you apply all these technologies, you are adding a ton of sensors in the life of this senior. So again, you need to be pragmatic, as Dan highlighted. You need to choose what customers want, what solve an insurance problem, because if you are solving an insurance problem, you are generating a value on your P&L, so you can subsidize the cost of technology.
And so much of the problem that we're solving for, I see time and again, are insurtech founders, or just founders in an IoT situation who are trying to solve a problem for an individual or for a company. And only afterwards they realize that, oh, this is also an insurtech. So, a friend of mine from Des Moines, a company called MakeYouSafe that is in the wearable space, Gabe started that company because his dad is a safety plant manager. And over a beer one night, they were talking and realized, better data would help you improve the safety of your workers. And that's how he started his company. And it wasn't until long after the fact that someone said to him, hey, Gabe, I didn't know you were doing an insurtech. He's like, what do you mean? I'm not doing an insurtech. I'm doing, a safety company to help improve the lives of manufacturing workers. And they're like, no, it's an insurtech because carriers care about that too. It's an opportunity not only to add that value, but also to mitigate risk. So from the customer side, how do you see IoT and the data from that changing the relationships with insurers to the insured?
Sure. So I don't know about everybody else who's in the insurance industry, but when I go home for family events and I see my grandmother or aunts and uncles, a lot of the impression I get from them is, ooh, you work for an insurance carrier, so we pay premiums, which is a tax, we get nothing back unless we have a claim, and if we do, you'll probably try to deny it, right?
Yeah.
So there's that perception about insurance, but in reality, insurance is a very noble business. What we aspire to do is to help our customers be financially whole, to have that safety net for the unexpected. And so what I see the value from a customer standpoint becoming is insurance carriers being able to be more of a helper in managing risk as opposed to just to the insurance policy financial backstop. We can use that data to bring down the total cost of risk for them and take more preventative actions, which if we make them safer, they should understandably pay less for insurance in the future. We would have to use the insurance policy less and less.
Yeah, Matteo?
I totally agree with Dan, but I would like to highlight one aspect. Frequently, when you see these new technologies, as a traditional insurer, you may have the feeling that these will require you to change your DNA, to transform yourself. Instead, I would like to highlight how your DNA is already focused on preventing. If you are a commercial insurer, you are already investing in loss control teams.
You bet.
So IoT will enable them to do better. And I would like to attach an element to this. Frequently, when we talk about promoting safer behaviors, incentivizing safer behaviors, I hear the finance of the insurer say, oh, this is marketing. It is not marketing. These are additional loss adjustment expenses that are focused to reduce the expected losses. If you reduce the expected losses, you are able to provide a more effective value for your policyholders. Maybe in the middle term, you are even able to have more competitive prices, but you are even generating a positive externality to the entire society.
Well, that's definitely where there's often a difference between, you know, a personal lines or a small commercial, because let's face it, the goal for them is to have no claims. But once you get into middle market and larger accounts, you know, there's no insurer that doesn't have claims. You know, they're going to happen. So I think they see it much more directly if through a sensor you can say, hey, something's going wrong with your freezer, and we're going to help you get it fixed. But by doing so, you're going to avoid, you know, a large loss on, you know, on spoilage or business disruption. That's value add. For the small commercial, for the individuals though, I think there's still this kind of debate of, are you just trying to get my data or get insights to me versus how are you really helping me?
Only if the value proposition is not well designed.
I would say the exact same thing. The idealist in me, again, says if your customers are hesitant to adopt or to share the data, then you haven't designed a value proposition that's sufficiently compelling.
Yeah.
So you know probably well the vitality approach for health and life, that they are nudging you to be more physically active. The South African player that invented Vitality, Discovery, applied it to personal auto. Their commercial is, we have an auto insurance coverage. Up to you if you would like to enroll in telematics. If you enroll, it will cost you $5 a month more. But it will reward you with fuel cashback if you drive well. You can obtain up to 50% of your monthly gas spending back. 90% of their policyholders subscribe telematics and pay to have telematics. And they're totally happy to share the data because they want to have the benefits.
Exactly the point I was hoping you were going to make, Matteo, is it's really how are we framing that with our customers, because I know so many carriers have tried, you know, home sensors, water sensors, whatever else, and so many of them never get installed because we didn't do a good job of helping them understand the value and giving that proper incentive to them, right? We talked a little bit about cyber a minute ago in the telematics space. I think there's also the cyber question in the IoT space and sensors. How do you see the industry looking at cyber risk associated with sensors that are connected through the Internet of Things?
Yeah, I guess the most important thing I could say is that is an issue that we take very, very seriously.
Yeah.
And for good reason, right? You know, one black mark on our brand from an exposure would probably torpedo much of our momentum with respect to IoT. So we meet routinely with our legal compliance and data protection people monthly, and we go through our whole portfolio of experiments from early stage to late stage and say, what are we missing? What do we need to address? And in parallel, every time we bring a new vendor on that we work with, we put them through the ringer with respect to assessing their technology and their security protocols. So we take it very, very seriously, and so far so good. But I think there are a lot of best practices that are going to emerge that perhaps the industry has not yet gotten a full view of that. The folks earlier were talking about CCPA and the European legislation, and that is an emerging landscape. But my hope, again, the idealist in me, is that if we can convince customers that our intentions are benevolent and in their best interests, and we can convince regulators of the same, that we're doing this for the betterment of our customers, that ultimately we will be able to get through those, and then we really just need to focus on the cyber piece and making sure that the exposure is not additive to the cyber exposure that they already have inherently.
Daniel, you just tapped on something that I want to make sure that we spend a couple minutes on, because it sounds like, you know, Hartford, you guys have been at this for a while. You've got a team dedicated to this. I'm sure there are a lot of insurers here in the room that are just thinking about it, or maybe have tried an experiment and still trying to figure out how do we go from there. So Matteo and then Daniel want to answer this as well. What advice do you have for our insurers in the audience for thinking about you know, IoT implementations, or maybe even specifically partnering with some of these vendors, because there's so many of them out there. What are some best practices and tips for partnering with these types of solution providers?
So I think that looking at the past 20 years, and at least for 12, I have been active on this domain. So I've seen a lot of failures, not only success stories. I think that you should not expect that the vendor come with the solution for your problem. So you should identify what you want to do with the data, because the same sensor can be used for many different purposes. So I think that any insurer, whatever is the size, should do its own homeworks, identifying which is the problem they would like to solve, which are the goals they would like to achieve. Then they do a scouting of the technology. Unfortunately, I have seen that many times players go out, scout for technologies, felt in love for a technology, and then never change their process, never use really the data. So I call that, I apply a framework that has been developed by a couple of professors of the MIT that have defined the journey of different players, is across country, across sector analysis, and identified that there is a specific category of players, fashionistas, that they felt in love for any new technology, the shining toys, but then they never use them deeply. So they never extract the full potential of this technology. So their return on investment on the innovation typically is low.
Yeah. Daniel, what tips, advice do you have for carriers starting off on their journey?
I completely agree with Matteo. We call it the shiny penny problem. But start with what you're trying to accomplish, then go find the technology. The other thing I would add for insurance carriers, a little bit different tact, is humility. I think that oftentimes you have to be humble enough to know that you don't know what will work, you don't know what customers will want, and you therefore have to try, see what the customer feedback tells you, see what the data tells you, prove or disprove your hypotheses, but you can't just look at the idea and go, that's not going to work, that's not going to work, that's not going to work, customers would never do this. You actually have to try. And you have to have humility in order to do that, because it's a muscle you need to build, and it's a little bit different culturally than how underwriters are wired to think about the world.
You know, one of the things I did at a prior carrier role is kind of a pop-up lab around IoT, just to play and experiment with what is possible. So I literally went out and bought some Raspberry Pis. If you don't know what they are, they're like $5, you know, circuit boards that you can plug in different types of things. So I literally took like a couple underwriters and a couple claims people and said, here, build a sensor. You know our customers, you're interacting with them. If you could build something, what would it be? And here's some tools just to try it out. And it was so fun just to watch, underwriters and claims people and others, playing around and just even getting their head around what is possible. Because all of this is getting us from being a very reactive industry to being more and more proactive. And here again, we've done that in segments through loss control, risk mitigation, et cetera. Looking further down the road and into the future, where does this go for us? I mean, there are so many possibilities. We've come so far in the last 5-10 years. What does it look like in the next 5 to 10 years?
For me, as I talked about those 3 buckets, the first one we started with was loss ratio and loss mitigation. I think the next leg of our journey is really getting more data at scale and starting to push that data down into the product and service offerings for true transformation. I also think with respect to the risk engineering model that we have too, back to your interest in imagery, right? So you think about an underwriter or a risk engineer, underwriters are looking at paper applications, and we're starting to get some data from aerial imagery and things. Yeah. And you've got risk engineers who are going out once a month, once a quarter, they see what they see in the hour or two that they happen to be on site. But with computer vision and imagery, the computer can watch the imagery real time, all the time. It's like having a risk engineer there all the time. So I think there's a lot of opportunities to do better for risk engineering by integrating the data into underwriting and risk engineering, and then to ultimately have that manifest in the product and service offering.
Well, and even to be able to have images over time. So I think it's easy for us to conceive. If you have insured a commercial property, if you had an aerial imagery of the roof or of that property, once a year, even over 10 years, you could glean a lot of insights. Is there now overgrowth? Has there been repairs? Has it been maintained? Is there clear, clogging of drains? But we're not going to take the time, nor do we have that data, but we will. And the computers, machine learning, AI will be able to tell us, here's how that roof has evolved over the last 10 years, because we'll have all that history of data. So Matteo, kind of along that lines, where do you see us being able to leverage this type of information and data in the future?
I would like to be extremely provocative.
Let's do it.
digital twins. So today, an average insurer doing pretty well on the usage of IoT is using the data in one function, in one business line. If you are a front runner, if you are one of the leaders that are mastering the usage of IoT, as Dan just described, you start to involve more functions around the table using the same data to see if you can enable benefits also for other functions. That is not the first reason why you started your journey. Well, there is a tremendous opportunity to democratize the usage of data among the organization. I make a concrete example. We have heard from the panel before, from the friends of Nationwide that have the pleasure to have at the IoT Insurance Observatory, their journey on commercial auto. So the data about the commercial auto will be extremely precious to reinvent umbrella. So an average enterprise have the largest exposure inside the umbrella that come from the third-party liability of their vehicles. In many sectors, many of the injuries that come from worker compensation are injuries that happen with an accident, with a vehicle. So why data that come from auto or trucks are not yet used to improve the processes of the umbrella or the pricing of the umbrella and of the worker compensation for these companies? So it's not easy. You need to start to create tools as a digital twin that will allow different business lines inside the carrier to leverage this data, to add additional knowledge and to improve the knowledge you have around the enterprise you are insuring or the customer you are insuring and their risks.
Awesome. I think that's a great place to wrap up our conversation. Daniel, Matteo, thank you so much. That was very great, very insightful.
Yeah, pleasure.
Thank you so much. Thank you. Matteo, thank you. All right, we have one more panel discussion before we wrap up this session before lunch. So without wasting any time so we can get on with the show, I'm going to invite our 4 panelists up and then we'll do introductions.
The audience is feeling tired, obviously.
All right, let's get started with introductions. We'll just start to my right and move on down. Who are you, who you're with, what brings you to Nashville?
Perfect. So Alex Johnson, hi everyone. I'm from Quantexa. I'm an operational analytics guy at heart. Worked for a number of different industries for the last sort of 12 or 13 years. At Quantexa, we've built a decision intelligence platform. Effectively, that helps fuse lots of disparate data together to do 2 things mainly. One is to remove data silos in your business, and the second is give you an enterprise view of your customer.
Excellent.
Cool. Paul Basir, head of data for Codery Insurance. We function as a small commercial MGA, selling business owner policies, general liability, PO, and soon-to-be workers' comp in all 50 states. So look for that, of course. And my role as head of data is responsible for the flow of information into, throughout, and out of Codery, but also have been responsible for how we leverage data for our 2-question bindable quoting platform, which also, another quick plug, launches next week. So take a look for that.
Awesome.
Hi, I'm Elizabeth Barcelou. I'm a data scientist at Counterpart. We do management liability insurance, and my role is basically building predictive models currently for underwriting and soon to, once we start doing a lot more, just sort of managing that.
Awesome.
David Edgerton, I'm with Erie Insurance. I'm responsible for some of the teams within IT, personal lines, our data transformation, and corporate applications. Erie Insurance is a regional carrier in 12 states and the District of Columbia, and we use independent agents as our distribution channel, and we're not the largest, but we do, for the region, we are approaching $10 billion in annual premium.
Awesome. Well, thank you all for joining us. We only have a little bit of time and so many experts here on stage. Let's dig right in. Let's start with Paul and say, what does it mean to be a data-driven insurer?
Sure. I mean, insurance is a depending on how you look at it, either a big math problem or a lot of little math problems, but it's all math, right?
It is all math. I love it.
Data's been a consumer insurance has been a consumer of data for as long as insurance has existed, and has, in many times, been at the forefront of what it means to have data. What it means to be data-driven, though, is how you use it. And there's two things that really come to mind for me when thinking about insurance specifically and how to apply data. One of them, I think, has really been led by InsurTech and VC mentality. Not that it's always been applied perfectly, but conceptually, thinking about lifetime value, cost of acquisition, and the entire duration of a policy, and getting as granular as you can on the policy itself, is one way that I think that is fairly nuanced and fairly recent evolution in how to be data-driven as a business. Additionally, not that actuarial math is unsound or that underwriting practices are bad, but I think there's plenty of opportunity to leverage advancements in data and capturing information, and maybe even more importantly, technology. We talk about data all the time. It's the technology that captures that data that can turn it into something that's really what we should be talking about, because it's always the so what. I don't necessarily believe in just having data for data's sake. It's what you do with it, and the technology enables automation and really for you to get the most out of that data.
And there's so much kind of that chasm between having the data and using the data, or knowing how to use it. And I think that's a big part of the journey of being a data-driven insurer, is how you do it in practice. And David, maybe from an Erie perspective,
Yeah,
how are you viewing it?
Yeah, there's so much that data feeds into and so many things you can accomplish. So for us, or for my opinion, it's really to understand and leverage data to drive yourself forward in whatever unique value proposition you have as a carrier. So for us, it's those agents. Our relationship has been established over 97 years, and we're really trying to use data to understand our customers and bring them together with our agents to make sure that they can be advisors as they would sell, service, and deliver on our value promise.
And also when we talk about data as an insurer, there's a lot of buzzwords that we use with it. Internal data, external data, open data, structured data, unstructured data. There's so many facets to how we're looking at the flow of information and how we use that information. Elizabeth, let's start maybe with the unstructured data piece. What are the challenges? What are the opportunities as we think about unstructured data? And maybe even for some of our audience, start with, what does that mean to you?
Yeah, so typically what it means to me is data that doesn't have an obvious structure, in that it isn't like an inherently just obvious independent variable that you can just plug into a model. That said, it isn't actually unstructured. There are multiple levels of structure that you can apply to it, and I think that that's sort of the key to getting started. So there are a lot of really cool technologies like NLP and deep learning that you can use on your really rich text data sets, but that doesn't have to be where you start. There's a lot of value in just sort of like getting up and doing it and trying to find like the really most basic level of structure that you can apply. And what's really useful about sort of just trying to do the most obvious thing first is it really gives you a baseline for first of all, what you think you can accomplish with this data set. If you say, I've done about 10% of what I think I can do, and it's already giving me this huge lift, that's a really good justification for the large investment that it will take you to go do a lot more sophisticated things with it. It also gives you a really clear prioritization for which unstructured data sets you really need to start using, and sort of where you can start plugging them in and getting value sort of way before you have to build something super complicated.
I'd like Alex and Paul to weigh in on this as well, but maybe even think about what technology can insurers use to help unlock some of those insights? How are you thinking about whether it's third-party data, bringing all that together?
Yeah, we've heard over the last 2 days around the data revolution, right? The amount of data that's there. Andrea yesterday in the first presentation, 90 times more data now than existed a couple of years ago. So the insurance industry is not without access to data. It's about how do you use and reuse that data. We talk about reuse a lot. It's not about having that point decision of I'm going to use this data point to make this decision. That's really useful, but how do I use that insight and bring that back in to learn more about my customer, the way they're acting, the way they're behaving? So one of the things we often talk about is, okay, what is that customer in your business? It's a person, or it's a an organization, or you're talking about a place or a location. You're talking about real world things here. So how do you use the data to piece together a better picture of that real world thing? That is around understanding the customer across the business. So I speak to a lot of insurance carriers and I ask, how many customers do you have in your business? And they go and look at their policy system and they tell me how many policies they have. They don't tell me how many customers they have, or they don't tell me the amount of products that customer individually has. So really for me, it's about using that technology to reuse insights on an iterative basis and then build a better understanding of either a person or an organization that you do business with.
Alex, you just gave me a flashback to a former role at a carrier. I won't name names, but we defined an agent like 8 different ways. And that part of that's just, legacy data, legacy systems, the siloing that we have oftentimes in our organizations that we're working through. Paul, what's your take on and your advice for the folks in the audience?
Yeah, I mean, so full disclosure, we use about 15 different data vendors to help us. Many of the audience, hello, all my friends out there, to help us support a lot of our predictive analytics and our automated underwriting, which I'll probably talk about here in just a little bit later in the conversation. And we are currently leveraging natural language processing, and many of our vendors are obviously using unstructured and/or potentially telematics data. However, the bigger the problem, the less bullish I am on it, because the 13,000th data point that we currently have is not something that's incredibly of interest to me. It's like the first 50 and making sure that I have some intentional redundancy in how I'm bringing that together. Using machine learning, confidence modeling to understand like what are the data points and the critical things that I have. And if you'll indulge me for a second, I spent 20 years in predictive analytics in sports before joining insurance, and I've kind of seen this. Moneyball, for those that might be familiar, happened.
One of my favorite movies.
Yeah, exactly. It happened in 2004. That's when I started, so did this for 17, 18 years. And I think that we're at the Moneyball. We talked about are we at the brink of the data revolution? Yeah. We're at the Moneyball stage right now in insurance. That's what drew me to it, because I've seen it all happen for the last 18 years. And back in 2004 and all the way through about 2018 or 19, I built simulation models that used box score information, so public domain information that literally anybody could have watched a game and just written down and known. And those simulation models outperformed anybody modeling off of what was called pitch effects or sport view, like literally like every single rotation of a baseball or a basketball and who was on the field. It took 15 to almost 20 years for that kind of analysis and that kind of data to actually gain value in terms of its ability from a predictive standpoint. And I think we're at that beginning of that right now.
Yeah, the tipping point's coming.
It's right here where leveraging the telematics data is great. We're headed there. Unstructured data, great for the most part. It helps answer questions we wouldn't know otherwise. Let's answer the questions we need to know now using data and ML.
So much to unpack there. I think what maybe is a good place to turn to for our carriers in the audience in particular is, how do you build a strategy around data? Because if you don't have a strategy around how you're thinking about data management, you're probably spending a lot of time just spinning your wheels, and that's very easy to do. The old analysis paralysis when you have so much information available to you. So let's start back with David. What are the factors that our insurers should consider when designing an effective data strategy?
Right. We used to specialize in analysis paralysis. We had consensus culture. It's a legacy company, so really everybody having a view and a point of opinion that's really valuable. So what we did, we had direct leadership from our CEO, Tim Nicastro, who invested in an enterprise strategy. And within that enterprise strategy, we looked at destinations. And these destinations might be renamed as enterprise programs, but really understanding tangibly where we're headed and why. And so you could break that up, you could have multiple destinations, which we do, but once you have a destination and you're able to put your arms around it, you're able to cast that vision and help connect people to it, you understand the data needs within that, and that's, again, aligned to that unique value proposition that you have as an insurer. So for that to happen, we had to invest heavily in relationships and communication across all of these teams. I won't say silos, because I think we broke down a lot of those in the last decade. But having the shared cooperation between these different teams, because as we look at enterprise projects, as we look at data enablement and data value, it's all horizontal. When we're trying to meet the customers where they are, we're trying to connect them with agents and help them either through the sale or the service, we have to have all those perspectives brought together. So we've started to build that linkage between the destination, through using the relationships and connecting it to what that means. And then the last part I would say is the focus is utterly important. So when you look at how much data is available, as has been said many, many times, what's that first increment? And what's the value you're going to deliver? Because we have to continuously remind the teams where we're headed and why, but we have to deliver value along the way. And we do that through use cases, we do that through demonstrations, and that really does help maintain that commitment as we move forward.
Anyone else want to weigh in on maybe the challenge of, well, I feel like another word that we've used way too much in this stage, but for good reason, legacy. Overcoming legacy thinking. What are those obstacles? How can we move beyond as insurers? And all of them that up to whoever would like to take that one.
Something jumps out to me, and that is this panel. Almost a decade in operations research, and company's been focused on insurance for 2 years. I was in sports for 20, she was at Cabbage, and he was in the military for 20 years before joining insurance. And I'm not saying that it's a requirement to bring people in from outside insurance, or that people who have been in insurance are stuck in ways, but it's the collaboration that David was mentioning, where you need to have kind of both of those pieces for true innovation, or at least there's value in having that for true innovation. You've seen industries, and it's been mentioned on panels up to date, we've seen industries that have made progress and greater progress, or the same kind of progress that insurance is about to make. And so learning from those, obviously, I think is incredibly valuable. The one other piece I would say to that, and I think it's very much more an entrepreneurial focus, but at Codery we talk about combating a culture of can't. And that is that anything that is perceived as an obstacle, unless it's regulated or required by our carriers or reinsurers, we need to consider the ways in which we can remove that obstacle and still be able to deliver on our initial vision.
Yeah. Go ahead.
I agree with that, and I want to add one thing. A lot of, within the people space, they're the biggest challenge but the biggest enabler, and really understanding and getting past the sins of the past is really, really important. So we had a lot of folks on our company floor that had to solve their own problems. IT wasn't able to build a solution in a timely enough fashion to their needs, that we have a lot of, it used to be called shadow IT. I choose to call it initiative, solving problems and trying to drive the company forward, and I applaud that. But having them buy into more standardized, more solid, more formal governance, security, in order to provide that data and all of the capabilities, that's not an easy sell. And so that's something we work through.
Yeah, and just to add a little bit to that, I'd say the concept of centralizing information, I think, is really important. So the access and the ability to empower an underwriting team with claims data, or to empower a data analytics team with claims information or payments data is really, really important. I think having access to that right centralized data is a big step to getting away from that legacy thinking. Claims analysts need more than just claims data to make a good decision on a customer. And I think the second thing I'd add is all around the connectedness in the data, and often hidden connectedness. Like data, it doesn't matter whether it's come from a telematics device, or whether it's come from a banking transaction, or it's come from a quote that's come online. The connectedness is to do with the person or the organization or the customer that you're dealing with at that point in time. So how do you use that one transactional data point to build up a better profile of that customer?
So I'm going to be a good moderator here and pause and remind the audience that if you have questions for our panelists, this is the time to submit them right now. Selfishly, I don't care if you do. I've got more questions for the four of you than we possibly have time for. Maybe we'll just keep talking through lunch. I don't know that Sasha and the team would like that. But if you do have questions for the audience, please do get them submitted. I'll do my best to work them in. So much of what we're thinking about in this data conversation is really enabled by technology and advanced analytics. I used to have a team of data scientists report up to me, and I'll admit I knew this much about what and how they actually went about trying to build predictive models. So I'd love for maybe to start with Paul and Elizabeth to weigh in on, so when we think about AI, advanced analytics, how is this transforming? How should we be thinking about leveraging these tools?
Yeah, I mean, if you think about an insurance company, first of all, I'm going to set aside the piece that functions like a SaaS business, but there's a huge opportunity with lead generation, cost of acquisition, renewals, et cetera, that we could talk about it another day. But really focusing on kind of the main parts of a combined ratio is loss ratio, and then basically all of this, right? The 35 to 40% that is the machine, as I like to reference it. And I think that we can effectively leverage machine learning and data science to optimize both of those things, those two pieces. Essentially, minimize your cost through automation while still keeping your loss ratio in check. And again, apologies, indulge me for a second. I'll give you another sports analogy, because where we won with the analysis that I mentioned before, and where I made my mark, particularly on the sports betting scene, which is very, very high stakes, multi-trillion-dollar industry across the world, is to shift the thinking that had historically existed. And this will, any actuaries in the room or anybody who's been in insurance for a long time will start to hear some familiarity. Historically, there existed a mentality to just group homogeneous games, in this case, every game from the same league together, look at a situation and say, okay, what's this upcoming game going to look like based off of the outcome that we had seen before? And that happened before the game and during the game. What simulation analysis did, and it doesn't have to be simulation, and that's not exactly what we're going to apply, but what we did to benefit or to build upon that was then look at who cares about what happened there. Let's look at the two teams and all of the players that are playing, and the weather, and the referees, and the home field advantage, and what are all those things. We got down to very, very granular and just projected that, whether it was during the game or before the game. That has direct application to how machine learning and data strategies should be leveraged for insurance, because actuaries typically look at the last 3 years of homogeneous, biggest groups possible information when coming up with rate filings. What we're ultimately, I think what the benefit is, and the way in which we can both automate all of underwriting and most of actuarial work pre-bind, is to bring in as much data as we can, leverage machine learning, the confidence modeling I mentioned before, AI to some degree, and predict out what that policy is going to look like. Not what all the policies like it are going to look like, what that policy looks like. Simultaneously cutting out underwriting costs while still building a more effective and more appropriate policy for that one, in our case, small business.
Yeah, and going off of that, I think it's not just automated decisions that you can make with AI and machine learning. You can make sort of augmented decisions, and that's better decisions. And it also is something that models can do. Models are really good at solving a really constrained, well-defined problem. And when you build a model that can solve that problem, you know that there's going to be, like, it doesn't have the context that an underwriter has. There's going to be some weakness. And so being able to say, like, I think that this model is really good, and I think that this is going to approach underwriting from a perspective that a human might not. It's going to add some signal that I think you might not be seeing, but we want to be really conscious about the fact that the underwriting team has a lot of context that we don't, and we can leverage that, and we can sort of cooperate, and we can have them give feedback such that we can improve the model and make it better at decisioning points that previously you'd really need someone to look at.
Awesome. I'm going to say it again. I think I've said it with every interview, fireside chat that I've had over the last hour. Carriers often feel data rich, knowledge poor, but even saying data rich implies value. We implicitly believe that there is value to the data that we have, but that doesn't mean we always know how to think of it as an asset and how to leverage it, how to truly, curate it or commercially drive value from that. David, back to you. How are you thinking about data as an asset at Erie Insurance?
Yeah, we're in the middle of a data transformation. So a lot of what we're trying to do is get the data centralized, it's been mentioned, get the data into something that's curated and ready to be spun off to data marts, and then enable a lot of analytics teams that are distributed across our different business units. So for them to really believe that the data will become available, we have some use cases that are in flight right now, but for them to truly understand that the data is driven for a customer-focused or an agent-focused use case, that's really the purest way that we're trying to get data as an asset, one, available, and two, to be used. Giving them the tools, giving them the structure and the security to experiment, to learn, to fail, and then in the end deliver that value.
Anyone else want to tackle data as an asset? Elizabeth?
Yeah, I think that in order to really get value out of your data, you have to take a hypothesis-driven approach. Like, it's really easy to get a lot of really cheap not very useful data. And just saying like, we have all this data, like why can't we make better decisions is really not like it's not gonna solve your problems. Like if you think about like what a good data source should do and how to evaluate it, like just throwing it into a model and sort of expecting to see whether it's useful or not is kind of totally unrealistic. You have to think like, just because a model is going to process the data different from how a human does, like you still need to be able to understand what sort of different value a new data set is going to bring to your problem and how it's going to help you solve your problem better. It also can do stuff like just improving the quality or the coverage of your data is a really good hypothesis to have, but you can't just sort of go in and think that like I have all of these data points, like why can't I use them? Why can't I build a data-driven company?
Yeah. Well, team, we are about out of time. So last question, literally like 30 seconds each. Getting back to the theme, data-driven, organizations, data-driven insurers. What are the keys? Final thoughts on becoming a successful data-driven firm. We'll start here again with Alex and work our way down.
So cliche, 3 C's. Customer, everything you're acquiring from a data asset needs to be focused on an enterprise view of your customer. That should be the first thing. The second is connectedness. How that data interacts with each other is really, really important. So you're not looking at individual data points in silo. And then the third is context. Elizabeth talked about it there. How does that piece of data or the whole picture of data derive more context on your customer?
We'll keep the theme of 3 going. There's 3 things I say all the time. One is data without context means nothing. You just mentioned that. 2 is find the so what, which is very similar to that, which is any time that you're trying to dig into an analysis, it doesn't necessarily matter even what the outcome is, and if you're not leveraging it, always look for the so what, always look for the application. And 3, automation is the key to scale. The businesses that I referenced earlier never had more than 6 employees, and we were able to take on an entire industry. And I'm not saying that that's what everybody needs to do necessarily, but think about how data can be leveraged with technology to automate.
Great, Elizabeth.
I think it comes down to communication and transparency just across an organization, making sure that data isn't something that's only available to data scientists and analysts, making sure that everyone feels like they're able to make decisions with data and also give feedback as to what data they need.
And then for us, it's really the top-down buy-in. We are large enough where without that top-line support, we won't have the funding, we won't have that commitment to see through what has proven to be a very challenging, very long process.
Awesome. Thank you all very much. Please join me in saying thank you to our panel.